Everybody, so great to see everybody. Happy New Year! Can we all stand for the Pledge of Allegiance? I pledge allegiance
to the flag of the United States of America and to the republic for which it stands, one nation, under God, indivisible, with liberty and justice for all.
Well, it's a little cramped there today, and we're going to let the administration here know that next month we need a little bit more room. But we still have the same delectables to eat and all. It's great. Now we have some guests, some special guests, and our Executive Vice President, Arnie Katz, will be giving you their names and presenting them.
Good morning, everybody, and from all of us to all of you, a happy, healthy year, and hopefully peace in the world to go along with it. Thank you for being here to our first meeting of 2024. The following folks are guests, and we'd like to acknowledge them. Howie Zimmerman from Dorothy Jack's office, the property appraiser's office. Victoria Green from the tax collector's office. Ed Saul, excuse me. To Maria Sachs, Nicole Carson from the Supervisor of Elections Office, Andrew Watt from the Clerk of Court's office, Joe Abruzzo's office, Amy Chamberlain from Representative Kelly Skidmore's office, Roger Michaud from Palm Beach County Property Appraiser's office, I'll speak a little slower, Evelyn DePlacy from Lori Berman's office, Senator Lori Berman, pardon me, Major Chris Keene, PBSO, Victoria Nolan, Palm Beach County Legislation Delegation Director, Rosie Bird from Lake Worth Drainage District, Terry Mitzi, aide to Representative Roth, and Jessica Jensen from Commissioner Marcy Woodward's office. Thank you all for being here.
Great. Oh, thank you. Executive Vice President Arnie Katz. I am President Lori Vinacore, and there's one other person who came in, Sherry McCardle from the South Florida Water Management District. Great to see all you distinguished guests. Okay, we're going to hear from some information from our first responders. First, a few announcements from the Alliance. Okay, water tests. Remember, they're starting the water flushes. They're starting tomorrow for Palm Beach County Water Utilities Department, but the water is still safe to drink, and that will be through January 25th. And our board certification course, presented by the Alliance and Gerstin and Associates, January 25th at 6 p.m. It will be a Zoom meeting, so if you would like to take a refresher or receive board certification, email me or message me. You all have my contact information either on email or by the website or from the very special newsletter that you receive each month. So, and I will send you the link to the Zoom webinar. Next month we're having Sheriff Rick Bradshaw, big security seminar, really, really important. And that's the security of our county and the security of all our associations. And also next month we will be handing out some important information on legislation, new legislation that they are going to be working on that actually does affect condos and homeowner associations. So we'll be giving you that information to tell you what they're working on in the legislation and legislative session this 2024. Then you can contact your legislators to give your opinions and all about whatever's there that they're going to be discussing and trying to pass. We have our first responders, Lieutenant Waite today. Thank you for attending for an update. Oh, and I see that Leslie Schreiberg's here too from PBSO. Good to see you.
Thank you. Good morning, Lions of Delray.
Good morning.
I hope everybody's doing well and had a wonderful holiday season. Just have a couple of brief updates for you guys. All right. Pleased to announce that our holiday initiative was a success. We had no major incidents in any of our shopping plazas. Okay. Review of 2023 end-of-year stats. Accidents were up 4%, which is a significant improvement from the year prior where we were up over double digits. So that's a plus. We responded to more than 5,500 more calls for service this past year. Okay. Our proactivity was up 27%, which is a direct reflection of the outstanding work the deputies are doing on a daily basis. Okay. Some of our goals for 2024 is to continue to address the traffic enforcement related issues, also reduce vehicle burglaries and auto thefts. Okay. Friendly reminder to all, please, every night, lock your vehicles, remove the valuables, especially your key fobs and firearms. Okay. In addition, we're also encouraging presentations for communities, such as VAST and crime prevention. Okay. If you haven't had one yet for your community, please reach out, and I will be more than gladly able to coordinate for you. Also, CRACE presentation, Citizens Response Against Active Shooter presentation. We need at least 25 people for that, and that's a popular presentation that we offer. All right. Thank you for your time, and have a wonderful beginning of the new year.
Thank you so much for attending today and for the updates. We have Chief Bill Stansberry from Palm Beach County Fire Rescue. He worked on that terrific program last month. What a terrific program we had. Please provide an update. Thank you.
Hello, thank you. Happy New Year to everybody. Yeah, I was hoping some of you saw the program last month about the whole blood, and that was a very good and informative program. Chief Coyle from headquarters came down, gave a great talk, and was a great presentation. So I just wanted to give a quick update. Battalion 4 is the battalion I oversee. It's the Western Delray, Western Boynton. We just put in our 9th station in November. It's a trailer out on Flavor Pick and Lyons. That eventually, while they're running calls out of that trailer, they're also going to be building the full-time station on the same piece of land. So once that, right now it's just a rescue. Once the full station gets built, it'll have room. We'll get a fire engine and a rescue truck out there. Battalion 4 for the month of December ran almost 3,500 calls and almost 40,000 calls for the year last year. The two busiest stations are 45, which is right here on Linton and Jog, and 41, which is on Woolbright and Military. Both those stations last month ran about 650 calls each. So that's more than 20 calls a day per each one of those stations, so they're busy stations. And so they're doing good, helping out.
Is there going to be a new fire station on Lake Ida near via Flora? Because I thought that was part of the development at Palm Greens that the developer was supposed to pay for a new fire station.
I'm for Palm Beach County. I don't know if he's doing anything with this.
Palm Beach.
Yeah.
Tell where you mean.
Okay. Okay. I know that we do it. There's also one other station. Not really in this area. It's on La Chalet and Military. That'll be opening up sometime in January. But that will provide response times up there, so more units won't have to shuffle around to cover other zones. So that'll help with having more units available. And for the immediate area, I'll have Dr. Vinicore speak about that. I don't know about any new stations on that area, but she'll speak about that. And stay safe. That's the only update I have, and I will talk to you guys next month.
Thank you so much, Chief Stansberry. Yeah, the Alliance worked on that probably about 2 years ago, and I know that Judy Goldberg knows all about that, correct? She's one of our directors. We worked to not have it inside Palm Greens, and it is going to be, from what we have heard on Lake Ida Road, and I do believe that Facilities did negotiate something with that, so it'll be there, and it will be, but it won't be inside Palm Greens, which they were happy about. It'll be in a close vicinity. And the timing for that, we don't know, but we can find out because we can just contact Facilities about that. Wow, we have very special guests today. We have Senator Berman and we've got Commissioner Sachs today. So can Senator Berman please provide an update?
Good morning, Delray Alliance. So wonderful to see you all, and happy, healthy New Year to everyone. So session begins Tuesday. So the joke, but there's a lot of truth to it, is that it's the 60 most dangerous days in the state of Florida for every man, woman, and child, and HOA associations, as you'll be hearing about today also. So we are gearing up. The governor has proposed a $114 billion budget. Last year we had $117 billion, and I imagine we'll probably end up close to there. So we have 2 months to put a budget together for $114 billion. Personally, I think we should switch to a full-time legislature, but that's a story for another day. So we will be doing that, and then we will be doing legislation. I passed out a handout which has some of my legislative priorities this year as we're moving forward. I support all of you, and I believe that the #1 priority that we have to address, again, is property insurance. Yeah. So hopefully we will do something. We will let you know how that goes. Like Dr. Vinacore said, there is always things about HOA associations and condos, so we'll be keeping you informed of that. Please, as we inform you, we will try and do an action item so that if you want to make a phone call, if you want to write a letter, whatever you want to do to get your voices heard, because you're the process. You, and especially a huge community association like this, you are the only ones who make a difference. So please have your voices heard. Please pay attention. If you want to sign up for my newsletter, you can go to my website. You can go to, actually the best way is bourbon.lori@floridasenate.gov, and we'll put you on our newsletter. We put out a weekly report during session so you know exactly what's going on. So thank you for being so involved, for being part of the community, and I'm so honored and proud to represent you, and I hope you'll stay involved with me. Thank you.
Terrific, thank you so much. And next month, we're going to have some action items for you that you can take back to your community. We'll have them listed. We have Commissioner Maria Sachs, who is now our mayor. Mayor Maria Sachs.
Thank you so much, Larry. Hey, Happy New Year, everybody. Happy New Year, everybody. You know, it is a tradition that we get New Year resolutions. And I have one for you. But I have a feeling that each and every one of you has your own New Year's resolution. So Lori, if we had time, I'd go up and down the aisles and ask. But I'll bet one New Year's resolution for this year is going to be this. Ready? Oh boy. Oy vey. We're going to be kind to each other. We'll be kind. Let's be kind to each other. Okay? Let's be kind to each other. And it's difficult at this time of year, because everybody from the Northeast comes down here, and they think they own the place. Okay? I'd like to do, and Laura, I want you to hear me, Senator Bourbon, I'd like to impose a tax as soon as they come into our state, from wherever they're from, and say, if you don't have Florida Drive, you gotta pay, okay? Just because you're so nasty sometimes. Everybody's nasty, right? And I'll tell you what, I'm not born and raised here. I'm an immigrant here. But I cannot imagine how, and what happens is that I went to the Ben's Deli the other day. You know, they know I'm from Michigan. It's just like, to the side. So I've learned from my husband to get a little bit tough, hey, I've been here. So I said, the guy was like a little rude to me. I said, why don't you just be nice? He goes, what? So I like to show folks, wherever they come from, that here in Palm Beach County, we're nice to people, we're kind. And I've learned one thing, when somebody does this to you in the car, you know what, I used to not anymore. I don't put my finger because this is Florida, right? I put my hand. So now what I do, hi, how you doing? Hey, like I know them, which worries them because did I know this woman? So, and part of being nice is getting involved. Do something. And you know, and I always like to think back at my mom. She passed during COVID. She passed with COVID. But I used to tell Mom, you get involved in something. Well, let me tell you, I need you. I need you in the office. And now that I'm mayor, which is a really big thing, not really, but what happens when you're mayor is people, when I leave a message, I say, this is Mayor Sachs. They call me back. They call me back. That's the only benefit. But another benefit by being mayor is this. If you want to help with something, I've got little kids here who have no grandparents here. For whatever reason, the grandparents are gone. But they need a lap. They need somebody to read a book to them. Patiently, like grandparents do. I have kids who want to have somebody sit and color with them. I cannot tell you how many dogs and cats there are that would just love to have, and I've got a lot of senior cats and dogs, that would just like to have somebody come over and sit down and pet them a little bit. Call me, or better yet, call Ed Saul. He's my intern. Once he gets to know the job, you know, but Ed Saul is my right-hand person here, you know that. And he's very important. And Sam Fleischman is here too. Where are you, Sam? I know you're here. But this is what's important, is to get involved this year. And I'll talk with you. Call me at the office, call Ed. I will find something that you like to get up in the morning and do. And one other thing, Lori, before I leave, is when I was a state senator, we had blue ribbon committees. We're setting them up again. These are committees that will work with, what are we going to do with Atlantic Avenue? How are we going to enlarge it? If you have any interest in human trafficking, if you have any interest in working on Atlantic Avenue's widening or Lyons Road, or any of the issues that we have here in our county, then contact our office, contact Ed, you can call me, and we're going to set them up. We'll have meetings here in my South County office. And we'll get them set up, and then we send our suggestions. We send them over to the legislature, or we send them right here to the county commission. And we get them done. We get a lot done this way. So I want to thank Lori and the executive committee and everybody here for what you do on behalf of the people of Palm Beach County. God bless you all. Let's have a good 2024, and we are ready for it. Thank you very much.
Thank you for providing updates and all the information about the county and your office. We are going to have our feature presentation in 2 minutes, because what we do, thank you very much to South State Bank for sponsoring the breakfast. We have Terry Russo today from South State Bank, and she is sitting back there. Would you like to speak? Say something.
Come on, Terry. Great turnout. How many in the room were born and raised in Florida?
Who was born and raised in Florida? You were. Well, we will need a good bank. Thank you so much for attending today and for sponsoring our breakfast. Terry Russo, South State Bank. Well, we are beginning our presentation right now. And we have the slideshow up. For Joshua Gerstin, he practically needs no introduction. We've had him here before. He gives excellent reviews of the legislation from last year and what we should look forward to, what's happening possibly in the future here, and including how to navigate through a few new insurance requirements. And then following Joshua Gerstin will be Greg Waltz, Vice President of Assured Partners Insurance, who will give you some updates and let us know about what the industry is all about. We have Joshua Gerstin, and please, questions, There is a microphone here. At the end, we'll have whatever, if you have a question, come up to the microphone and ask it. Okay? Thank you. Or else we can bring the microphone around if it's a little too tight to get in there. We'll have somebody do that. Joshua Gerstin, thank you.
Thank you, Lori. It's great to see everybody. Happy New Year. I hope everybody had a great holiday season. Looking forward to a great 2024. I could actually personally vouch for Terry Russo over there at South State Bank. I have known her just by doing community association loans for about 18, 20 years. I just realized that when I had another loan to do with her, and I looked up her email. I was like, oh my God, we've known each other forever. So that's a little bonus there for Miss Russo. So when I was going over what I was doing today with my oldest daughter, who's back from college, always the smartest in the room when they come back from college, she's like, hey Dad, why does your presentation say 2023 and we are in 2024? So yes, she proved me right again. She was the smartest person in the room. So as a disclaimer, this is from the 2023 legislative session. It is the most up-to-date that there is of past legislation. It just happens that I'm doing it early in 2024. So just so you know how to handle this presentation, I'm going to be giving you a lot of information, but it's all in front of you. And you cannot remember everything. Nobody expects you to remember everything. The key thing is be an issue spotter. Somebody mentions something, you say, hey, yeah, that lawyer, he was talking about it. You spotted an issue, you go look it up, you find out what needs to be done or to consult your attorney. All right, let's start with the most exciting thing, and that is SERS. So after the legislative session, Governor DeSantis convened an emergency session to pass what is known as a glitch bill. That's a bill designed to fix any glitches in a prior bill. It sort of cause a problem and then make the problem worse, or try to solve it. Some of these provisions, though, and we'll go over them here, very helpful for community associations. First one is multi-condominium associations. I don't think that applies to anybody here. If you manage more than 25 condominium associations, you have a different line you could use a line of credit for reserve funding. For most of you, this is condominiums only, 3 stories or more. Reserve funding must be based on the most recent SERS study. I know a lot of you do reserve studies maybe on your own. You get contractor estimates, you figure out what's going on, there it is, you put money in a reserve. No longer. If you're 3 stories or more, you have to use a structural integrity reserve study. If you want to waive your reserves, you know that you can do that up until 2025 and then they have to be fully funded. However, it used to be that a majority of the members at a meeting can waive reserves. Now it has to be a majority of the members of the association. So the legislature is tightening things up. However, as a good note, inflation can be considered when determining reserve funding. And as we know, inflation is a sort of a sticky issue these days. That will be helpful. The liability on directors for not performing SERS was changed. It's willful and knowing now. It used to be a strict liability standard. Believe it or not, the legislation had in it, if you did not do your SERS study, then you were immediately violation of the law, and it was like misdemeanor penalties. That has been changed. You have to willfully and knowingly disregard the law as it relates to SERS. Let's see, architects and engineers can now perform the visual inspection. Exterior doors are now reserve components, and the floor and foundation are not unless they are part of a building structure, which, of course, they are. So now, exterior doors, floor, and foundation, okay, are part of your reserve components. Insurance premiums that we're going to hear a lot about and how they're skyrocketing, those are excluded from the 115% calculation where members can propose their own budget. The Florida Building Code is now designated the authoritative guide on whether or not your building is the height in which all of these new laws apply, the SERS applies. 14-day notice to members as far as any type of notice that you get from a government about a milestone inspection. A local governing authority has the discretion to extend the deadline of an inspection. Keep that in mind. If you haven't already started your service inspections, you're probably going to need an extension. It's very hard to find the right people that qualify according to law to do the inspections, and then of course you have to deal with waiting for the reports and getting everyone together. You may not have enough time, you may be able to get an extension locally. The report, the service report, 45 days has to be sent to the members. The local authorities, if you are on a shoreline, they could make the 30 or 40-year inspection 25-year inspection, which is really one of the only things that applies to how this all originated, which was Surfside. Let's see. Developers must tell people about their own inspections that they're doing, as well as give reports. The bottom line for CSRS is a few things were fixed. It's still going to be very expensive. And my clients I know have had meetings, sending out emails, sending out notices, just telling residents, we're gonna have to fully fund reserves, plus our insurance has gone up. And if you're not doing that to your residents, you should as well. The more prepared your residents are for these sudden spikes in assessments and other costs, the better off the entire association will be. There is a law pending that was coming up for the next legislative session about roofs. And it will allow for the cash value of roofs. Citizens will be the one that will do it. It should lower your premium. So like I know Senator Berman was talking about, Lori was talking about, action items. If you want to do something, you would contact your local legislator at the state level and tell them to approve the pending bill for cash value of roofs. Okay. Now HOAs. HOAs, this sort of flew under the radar. Last year the legislature approved what is known as the HOA Bill of Rights. All board meeting notices now must list the agenda of the meeting, just like condominiums. Okay? So you're probably wondering, oh, I have a sign out front that says board meeting tonight. Sorry, you're gonna have to list what's on the agenda. Owner deposits. If you collect a deposit from an owner for anything, security, tenant, to use, to rent out a facility, anything like that cannot be commingled in the association's funds, must be returned within 30 days after whatever event it was being held for, and you have to give a ledger of the amounts used after receiving a demand for such within 7 days. Directors and officers, kickbacks. Directors and officers, obviously before you weren't allowed to accept kickbacks. Now there's been a monetary amount put on it, $25 or less. Anything more than $25, including food, is considered a kickback. Official records, which is the bane of existence for most community associations, that has been broadened. Now an official representative of an owner or someone the owner designates can actually go and inspect the records on behalf of the owner. Fines. I don't know if many of you are levying fines in your HOAs. They're a fairly decent way of enforcement. You could now levy fines for violations of rules. Okay? And also the fining committee has a little more leverage. Even though they are only allowed to approve or reject a fine, they can add a comment to the owner on how to cure the violation. Previously it was accept or reject with no comment from the fining committee, or their finding was invalid. Voting. They're making crimes for people who commit crimes when it relates to voting at an HOA. It boggles my mind that somebody would commit a crime to work as a director and not get paid, and just put in these long hours where everyone just only tells you about the problems where you live. But nonetheless, I guess there must be people there. I think in Miami, there's people there that do that. Anyway, so you cannot willfully affirm. You can't attempt to perpetrate a fraud. You can't try to threaten anybody, prevent anybody from voting. You can't menace, use bribes. You can't promise anything of value to another member with the intent to buy the vote. So like, hey buddy, come vote for me and we'll all go out for a nice big steak dinner. You just can't do these things. And I don't think these things are rampant. What's going to sort of flare up is going to be owners who are not happy, probably not even running for the board. They're going to start laying down accusations. Okay, so just sort of be mindful of that. Okay. Flags, this is another big thing. Flags, an association can limit the flags that they want, okay? However, you cannot limit these flags. US flag, Florida flag, all of our armed forces, POW, MIA, as well as first responders. So you could say no flags except for these. Like, so if you don't want kittens, maybe I've had a lot of associations in the last year with political stuff, you know, whether it's a candidate, whether it's a country, you know, and it causes division. And once the flag goes up, that flag, if you don't have a rule against it, that flag stays. It's the flags after that that you can regulate against. So the bottom line is, if you haven't started regulating flags and you don't want flags, the best thing to do would be to pass a rule saying these are the only flags that you can have at your association. Okay, so now also you can no longer restrict people from storing junk and garbage in their backyard as long as their neighbors can't see it. Okay, so that used to be a thing where people would put boats and they would put trailers and it's gross and it ruins the backyard, but as long as your neighbors don't see it, now you cannot enforce against it. This is actually something that's exciting. This applies, exciting in my world, this applies to condominiums only. And this is a great way to save money on insurance, hopefully. It has nothing to do with your roofs or your elevators or hurricanes. It has to do with security. So, if a condominium association does all of these things, they will be exempt from liability if a criminal or a third party commits a crime on. So that is actually an amazing gift from the legislature. There's a lot of things to do. I'll touch on them briefly, but the bottom line is this, and I'll give you an example. Somebody's parking in your association and they get mugged. The lawyer's going to sue the association for inadequate security. That's primarily where the money is, and the association's going to have to get its insurance carrier involved. They're going to have to deal with a whole lawsuit. However, the association would be exempt from liability, and ultimately, if they get sued, it would have to be dropped if they maintained these items. Security cameras with video that's retrievable for 30 days, lighted parking, dusk to dawn, sorry about that, lighting common areas, deadbolts, measuring at least 1 inch on every door of every unit. So, for condominiums that actually have control over exterior doors, no problem. Some associations do not have control over exterior doors. You would actually still be able to install the deadbolt anyway. Okay. Locking devices, locks and gates for the pool, peepholes. Now here's another one. Peepholes are viewers on doors or a window next to the door. Okay, so some associations, they don't have peepholes, there's no window next to the door. This could get expensive for them to be in compliance. And then there are employees like property managers that also have to be trained, and it seems like the Florida Crime Prevention Training Institute of the Department of Legal Affairs will be coming out with more information. But these are the generalities. You should start looking into this now because it could save you a lot of money if you have that certificate from the department that says, yes, we are in compliance. And it's also obviously much safer for your members as well. Okay, the case law update. Before I get to that, I just wanted to quickly mention, I already told you about the cash value for roofs. roofs or roofs. There's one other bill that's pending. It's for estoppel fees, and they're trying to ban estoppel fees. And estoppel fees, when you buy a home and you send a letter to the association, you say, hey, I'm about to buy this home, how much does this owner owe? I don't want to pay for the owner's delinquency, so tell me how much they owe, we'll settle it up at the closing. There's actually a decent amount of work that has to be done. There's a lot of liability, typically on property managers that prepare them, because if the property manager or whoever prepares it does not get it right, anything they leave off the estoppel, the owner doesn't have to pay. Okay, so there's a lot of liability there, and they charge varying amounts that are set by statute. Okay, the legislature wants to get rid of that, the charge. I'm not sure why, but the bottom line is that fee is going to be transferred on to you guys, the community association. And you'll be paying to be part of sales that you're not really part of. You'll be paying for the owner's sale of the property. So if you want to contact your legislature, tell them the law that's banning estoppel fees, no good. The law for cash value roofs, I'll give you a thumbs up. So on the case law update, just briefly, 2 exciting cases. The first one is, which you guys already know, and sorry about that again, is board-made rules, okay? The first thing is, I can't tell you how many associations come into me and say, we passed these rules, X, Y, Z. I look in their documents, they don't have authority to pass rules. You must make sure your documents give you that authority. And as you know, a rule can't conflict with any other governing documents. The rules are lowest on the rung. We have statutes up here, declaration, bylaws, articles of incorporation, rules. Neither one can conflict with the other. In this case here, they had in their declaration no more than 2 pets can be allowed, and they passed a rule saying no tenants can have pets. Okay, so the court looked at it and said, your declaration says no more than 2 pets, doesn't say anything about tenants. Making a rule about tenants and prohibiting their pets is no good. You lose, it conflicts, and now you have to pay the owner's attorney's fees. The second one came about in an unfortunate incident, and it has to do with restricting access. One of the best things to get people to sort of comply is if you have a guest or a member gate, and that member gate, you can turn off access until the person pays the amount that's owed. It's 90 days after they owe any delinquency, the board votes, you can block that person's access. That's still legal. However, you have to be very attuned to the situations, because in this instance, in this case, this poor woman, she was being abused by a spouse, there was a protective order in, the association put her on the guest list, she had trouble getting in that way, she was an owner, she couldn't get in the owner way. Bottom line is, she ended up getting really severely hurt, and the association was found liable. So what I'm getting at is, restricting access is still allowed, but you have to look at things on a case-by-case basis. And if somebody presents to you with a situation where a normal, reasonable person would say, hey, this is different. This person's in danger. Yes, they owe money, we're at odds, but you still then would have to accommodate them so that they are safe. Okay. And that biddy, thank you very much for your attention. I'm happy to answer any questions that you guys have.
Wow, that is terrific. Great update. Oh, let's see, are there any questions? I've got a lot of questions here, so I'm going to walk around since people are finding it difficult to go through. Start with, raise your hand.
And if you have any questions that you don't remember, you can email me or call me. They typically get back to everyone within 24 hours.
Okay, right back here. I hold the microphone.
Hi, I'm the treasurer at Valencia Palms. We have...
My condolences.
We have one unit where the owners have passed and they're constantly in arrears. We actually went to collection and now they're in arrears again. Are you telling me that with this new estoppel law that they're proposing, that if that house finally sells, The community has to pay, has to cover those arrears?
No, the arrears would still be owned by the current owner and new owner if they don't pay it off. But just the listing of it, telling them what they owe, the cost involved in that, which is typically a couple $100s, that would no longer be allowed.
Okay, I'm coming through here. Right here you go.
Good morning. We replaced our elevator last year for $80,000. We also painted. Am I considered fully funded at this point?
No.
Okay. What do I have to do to be considered fully funded?
You have to get a structural integrity reserve study and follow those guidelines.
Okay. It's a two-story building though.
Oh, it's a two-story building. That's a different story. Then you don't need to get a structural integrity reserve study. And what you need to do then is look at your reserves, because you should have anything over $10,000, right? You have more than roofs. You have more than painting. I think there's paving, right? There was right. So when you look whether or not you're fully funded, if you just did your elevators and you just did your roofs, you're fully funded for this year because there's nothing owed, right? And your funding will continue in the following year, but it should be very low because you don't need roofs for another, depends on the insurance company, either 10 or 15 years. So you're fully funded when the repair is done, but it starts again next year.
Thank you.
You're welcome.
Okay, here you go.
Thank you. How often should homeowner associations review their documents? How many years, and what is the proper procedure to doing it?
Sure. So sort of as a baseline, every 30 years, your governing documents just need to be renewed or they expire. You're no longer able to enforce them. As a general matter, you should have a thorough review, probably about every 5 years. And what you do is you have a committee or a bunch of people get together and they just sort of eyeball, hey, I don't like this, I don't like that, I don't like this. Not in legal terms and not even in terms that are in the governing documents, but just in your own personal experience. Then you get together with your lawyer who should review the documents. You come up with a bunch of amendments. If you have too many amendments, you redo the whole thing. If not, you pass those. But about every 5 years.
Thank you.
My question is regarding the new roof. If an insurance company, they say if the roof is built this year, and it is, we have a discount only like $60 instead of nothing. So this is fair, or we have to shop around for another insurance company?
Good luck with that. He will help you with that. I can tell you this, the way that it is now, an insurance company, they'll look at a roof and you might have a 20-year warranty, but if the roof is 10 years old, would you bet on that roof? So they would tell you, hey, replace your roof, right? And what else are you going to do? The insurance market is so limited that if you don't comply, and even citizens might tell you to replace your roof, or they're not going to cover you. So you're in a bind, and it's not unusual. That's why I said cash value for roofs would be good, because you could sort of wait out a warranty a little bit longer without having these crazy burdens placed on you. But otherwise, if an insurance company tells you to replace it, other insurance companies are going to want the same thing, and you're sort of in a bad spot.
Yes, relative to cash value versus replacement value, you mentioned that the state legislature is approving that.
But no, it's pending.
Pending, okay. But going to cash value, that then puts the burden for co-insurance on the association, does it not?
It could, absolutely.
And it is. And depending on, and that also depends on the age of the roof. So cash value, insurance companies will depreciate the roof,
right,
depending on how old the roof is.
Right.
So we're in a community, we've built in 1985.
I haven't seen.
Depreciation. Cash value.
Right. The depreciation on that would ruin the cash value. But if you still have a roof from 1985, you're way, it's a 40.
It was replaced after Wilma.
Okay, so it was after Wilma. Okay, so Wilma was about what, 15 years ago, right? What? 2005. 2005. Oh, even longer. Okay, so if you think about it, your roof isn't really worth that much. The scenario with the cash values doesn't really sort of help you. I'm looking at the association with a 10-year roof, and an insurance company says, hey, replace it now, or replace it next year. And the association just got done, 10 years ago, sort of building up to get to that roof. that's where the cash value would be somewhat helpful. You know, the risk gets borne both ways. There's still that risk there, there's no doubt about it, but it gets sort of, you have a choice to a certain degree.
So one other question relative to cash value is it my understanding that banks for purchases in the association, if someone is selling their unit, if their association goes to cash value, depending on the value, on that cash value, they may not give a mortgage to the buyer.
That I have no idea about. And it all really depends on which lender that you're using, and if the lenders now look at reserves, they look at structural reports, they look at all these things. Whether or not, though, a lender is going to lend on a roof that's 10 years old, I don't think that'll be that much of a problem. But an insurance company insuring a roof much longer than 10 years is probably where the problem's going to come in.
Okay, we have one from the audience here.
All right, welcome.
Okay, go ahead.
Yes, you started to talk about cash value as compared to replacement value. Could you explain to the audience the difference? Because I don't think they're aware of it.
Cash value, sure.
Cash value takes into consideration depreciation, especially on an older roof.
Sure.
So it makes the association more responsible for the replacement of the roof.
Sure, so cash value of a roof would be the actual cash value of that roof, right? And there's depreciation. Every year, the value of that roof goes down because the roof weakens structurally, everything that goes along with it. Replacement value is the actual value of a full replacement of that roof. And the problem that, again, this really wouldn't be good for people right now with older roofs, right? Because the insurance company's going to tell you to replace them. There's nothing you can do about that, but going forward, what this would aim to help is people or associations with roofs that may be 10, 12 years old, and they're being asked to replace them. And it will sort of, share the risk a little, where the association would only get the cash value of that roof, but they also don't have to immediately replace it until they feel the roof itself has stopped its useful life.
This might be a hard question, you might not want to opine, but speaking of the 30-year documents are then stale and no good, what if somebody sues the association and the documents are over 30 years old? Is the judge going to say you lose because your documents are stale?
Yes, if they haven't been renewed, yes.
Marta.
Yes, that's the Marketable Record Title Act. The question is, if those documents expired and not renewed, and then the association goes to sue, would the court dismiss the case? And the answer is absolutely yes. I've had associations who have not renewed their documents, have lost their ability to levy assessments, enforce anything, or even run their association. You can revive them, but it's sort of a process. So 30 years for HOAs. Well, you got to go with it.
Well, yeah, you know what? Yeah, he'll be here after definitely to answer more questions, right? You'll stay till the end, correct?
I'm probably not going to stay to the end, but I'll walk out there. You follow me, I guess. Or actually, you don't even need to do that. Email me or call me. I promise you, believe it or not, I will get back to you in 24 hours. Really,
Okay.
It's my pleasure.
We're just going to take a couple more.
Sure.
Then we do have another speaker.
Yes.
Somebody here wants to, okay. I hold the microphone. Sometimes it's difficult to get the microphone away from somebody. That's why I hold it.
End up in your pocket.
How or who determines the actual cash value?
I'm sorry?
How is it done, or who determines the actual cash value?
I think there's probably going to be just tables based on that with standard depreciation. That I don't know.
Okay.
Is that it?
One more here.
Very patient from Newport.
Yes.
Newport Cove.
Okay.
My question concerns an election, the preventing of someone from voting.
Yes.
We're a homeowners association and we have the right to vote by proxy. However, the board this year is demanding that the proxies be notarized.
Ooh.
Is that legal?
It's not appropriate for me to give you legal advice, so this isn't legal advice, but generally speaking, that's absolutely inappropriate.
Okay, well, if anybody has a real pressing question they need to speak to...
Really, call me, email me, not a big deal. Get back to you within 24 hours. In the meantime, happy and healthy New Year. Thank you, everybody.
Thank you so much.
Thank you, Lori.
Thank you. Great job. Your thing that you took. Oh, great, no problem. Good. Okay, and we have here Greg Waltz. Speaking from the industry, you will hear from the industry, and this is very, very important. Remember in September, we had all the legislators here, and we just heard a lot of issues that there is with legislation. We want to know solutions. And maybe from this insurance agent, Greg Waltz, and many people know him, if he could give us some suggestions on saving money on insurance. Here you go.
Thank you, Laura. Appreciate it. Thank you all for inviting me here today. I'm going to give you the brief 10-second commercial of who I am. I'm with Assured Partners. My name is Greg Waltz. My office is in Deerfield Beach. We're the 5th largest property and casualty insurance agency in the country. All I do every single day is condominium and HOA insurance. So we insure over 1,000 associations in the state of Florida, and we insure over 5,000 in the country. So it has been an interesting year and past couple of years for insurance, and I'm going to give you some statistics, and I know there's going to be a lot of questions, obviously, given what's been going on, but there's been $133 billion this year in total losses globally, insurable losses. The United States is responsible for 64% of the worldwide overall claims and losses. Florida has 8% of the property claims in the entire country, but we have almost 80% of the litigation in the entire country. And that is why, the main reason why rates are going up is litigation. It's very litigious in South Florida, and a lot of that is the insurance companies don't give you the fair amount of your claim right away. You have to get an attorney and keep fighting and fighting and finally before they eventually settle. But that is a huge reason why rates are going up. 12 months ago, if you asked me that question 12 months ago, rates were going up 60 to 80% last year. This year, the average increase we've seen is around 30 to 40%. So it is tapering off. Rates are still going up, but there has been a slowdown, and part of that is we haven't had a major storm this year. We had Hurricane Idalia, and that was a small storm. Where they're predicting $1 billion, $3 billion, which is rather small in terms of a hurricane. So I anticipate that rates continue to drop a little bit. 20 to 40% is where we're at now. I wouldn't be surprised if after, the next couple months we see 10 to 15%, rate increases, and hopefully what we see happen is what happened before Hurricane Irma hit in 2017. Rates were going down. We were seeing 20, 30, 40% rate decreases, but then in 2017, Hurricane Irma hit, and that's really what put the log on the fire. And that's really what started all of this. That was the catalyst. And then we had Surfside, okay? Surfside was huge. Before Surfside, no insurance company cared or asked for a 40 or 50-year inspection. They didn't care about the structural integrity of the building. They didn't look at electrical panels. All of these things now are coming to light because of Surfside. And one of the biggest takeaways from Surfside, and I'm sure a lot of you know this, is appraisal values. You're required to get an appraisal every 3 years, and with the cost of materials and labor increasing, appraisals are coming in at 20, 30% more than what they were a few years ago. So you add that appraisal value increase to the rate increase you're getting, and I'm sure some of the folks in this room, you've seen 60, 70% increases. We've had some that are 200% increases a few years ago because they hadn't had an appraisal done in 10 years, okay? So it's very important to stay up to date with those appraisals, because the longer you go without it, you're going to get hit really hard years down the road. And if the insurance companies feel that you're undervalued, they're going to bump the values internally with whether or not you like it or not. So it's very important to be up to date on your appraisal. Make sure you get it done every 36 months to comply with the statute. And what Joshua was saying about actual cash value, and just to clarify, ACV on roofs is not a new thing, okay? It will be possibly a new thing for Citizens. Citizens right now only offers replacement costs on roofs and the buildings, so this is a huge change for Citizens. And a lot of folks might be eligible for Citizens who were not eligible before, because the number one thing every insurance company wants to see is, when was your roof replaced last? What is the condition of the roof? And they want to see a roof condition report to see how much useful life you have left. So ACV on the roofs is a problem for mortgage companies. I know there's a question about that. A lot of mortgage companies will not lend if the association has what's called an ACV endorsement on the roof. And we go through it every day in my office, because sometimes you have no choice. Some insurance companies will only give you ACV on the roofs if your roofs are old. And 12 to 15 years is starting to become the cutoff for a lot of insurance companies, particularly the Lloyd's of London markets. Those are the companies that are adding those ACV endorsements and wording on the policy. If you're with American Coastal or Heritage, those are some names you might have heard of, or you might have policies with them. They don't offer ACV, so they're only going to give you replacement cost, which is, yes, you have a question?
What is ACV?
Actual cash value.
Thank you.
Actual cash value. So that just means at the time of loss, you're going to get the depreciated value of your roof. If your roof is 30 years old, they're going to give you $10 for your roof, okay? And who determines that? The adjuster. And if you have an issue with it, then you get a public adjuster and you fight them over it. But the ACV wording is on that policy, and it's going to be depreciated no matter how you shake it. 50-year inspections, 40-year inspections, these are all things that insurance companies are looking for. Dade and Broward County, obviously, and now Palm Beach County is going to be added to that mix. Is there questions? I know there's questions. You want to?
Oh, sure.
Yeah.
Sure. Questions? Particular questions? Oh, we got one over here.
I understand the fact that a roof may be 10 years or more. When you have a new mitigation and the insurance accepts it and lowers your cost to a reasonable amount, that's fine. However, in having your home appraised, most people have improved their homes, added storm windows, had new floors put in, bathrooms redone. So getting it appraised brings your rate up again. With no claims through, say, 15, 20 years with the insurance companies, we are in a catch-22.
Yes, exactly. Yep, the government, the state forces you to get a new appraisal. And when I say appraisal, it's not a market value appraisal, it's replacement cost appraisal. So it's labor, materials in today's dollars. That's all they're looking for. If you put a new roof on, it's not going to raise your appraisal value because that's already being incorporated. It's a replacement cost policy. But you're right, it is a catch-22 because you're damned if you do, damned if you don't. You know, you have to do it, but when you do it, your values go up and your premium goes up.
Right, and
She always makes a good point.
And with the inflation rate, not everybody's in a position to pay those amounts of insurance.
Yep, I know. I see it all the time. I mean, fixed income, the values go up, the premiums go up, and you can't keep up with the rising costs. And we've had a lot of associations, you know, special assess, you raise the maintenance or a combination of both, you get on a payment plan, but it's unsustainable. So I'm hoping something happens in the legislature to cool this down. I think the ACV on the roofs with Citizens will help because Citizens right now, for a lot of associations, is drastically cheaper, but a lot of associations don't have roofs in good condition that are acceptable to Citizens. So if we can circumvent that, where the roofs aren't as big of an issue, that would help drive down the cost significantly, I feel. So, but that's all pending in the legislature.
Well, this is all good information. We're looking for solutions.
Yeah.
Solutions.
Greg,
Yeah.
if an association has insurance on buildings and they're hesitant to switch companies if they find a lower rate, if they only switch to a company that's domiciled in Florida, or it's okay to switch because they're protected by the Guarantee Association if that company they change to becomes insolvent. Is that not correct?
Yeah, so you're talking about admitted versus a non-admitted carrier. So admitted carriers are backed by the state of Florida. That means if they go out of business, the association would get your unearned premium back and the state of Florida would pay any claims. And we've had 10 insurance companies go out of business since 2021. So admitted carriers would be the way to go if you have that available to you. A lot of associations, due to the age of the building or the age of the roof, cannot get an admitted quote from an admitted insurance company. And there's only, you have American Coastal, you have Heritage, you have Cabrillo, Cypress, and First Protective. You have 5 admitted insurance companies in Florida. There's only 5. And yeah, you have American Coastal, Heritage, Cypress, First Protective, and a company called Cabrillo Coastal. 2 out of the 5 are really not writing new business. The remaining 3 want to see buildings 1990 or newer, and they all want new roofs within the last 5 to 7 years. So there's a very small little hole that you have to fit into to get into one of them. And if you're not with one of them, you're with Lloyd's, paying through the roof, or you're with Citizens, assuming your roof is in good condition and Citizens accepts it.
Yes. We like to know ways that we can decrease our insurance premiums. I have Lloyd's on a condo that I have on the ocean. And it is, yes, they look, it is expensive.
Not only is it expensive, the coverage is not as good. You have extremely high deductibles. You might have a 10% or a 15% hurricane or named storm deductible. And if you thought ACV was an issue for mortgage lenders also have an issue with any deductibles that are more than 5%. So you run into so many different types of issues once you start stripping coverages with these mortgage lenders as well.
Okay, you have a question?
I had Citizens, and I have a roof that's 3 years old. I had a mitigation report done, and Citizens had accepted me. And suddenly, midterm, they sent me to a peninsula state, maybe?
You're talking about your personal insurance? Then.
No, my homeowners.
Yeah, your personal homeowners. Yeah, so...
Well, because our HOA is a homeowner's insurance that doesn't cover
Right, you're responsible
anything.
For your own.
Yeah, we're responsible. Yeah. So they switched me to this peninsula, and they sent me a quote of $400 more than Citizens, with my mitigation report, with my 3-year-old roof, and I just didn't understand it.
Yep. So biggest takeaway is Citizens, at the end of the day, does not want to write your insurance. They are the market of last resort. They are not here to save Florida from the insurance crisis. They are writing more policies than they've ever written. This past May, in 1 month, they wrote more policies than they did in the previous 18 months combined. So they're at over 1.4 million in written policies. And what they did to you was they're depopulating certain policies that, they go through their book of business and they select, we want this group of people, we want them out. So they put you with an admitted insurance company. And the reason it was more money is because Citizens has what's called an eligibility rule. So when they depopulate you, all they have to do is find an option that's 20% higher, and they can push you to that, even if it's more money. It's in their guidelines. It's called Citizens eligibility. And I'm sure a lot of you have gone through the same thing.
Are there ways of decreasing your insurance premiums, say when your water heater gets a little older? Because I had a problem with that, where they almost didn't, they checked the age of the water heater and they might not have given me insurance, even Lloyd's might not have. So is it, can you talk about that?
Yeah, from a condominium, from the master condominium standpoint, they don't ask about water heaters at all. So from a personal insurance, I have not heard of that before, of them even checking water heaters. I know you get credits for windows, you get credits for having a roof that's FBC equivalent on your mitigation report. You get roof credits for secondary water resistance. If you have a mitigation report, these are all little boxes that your inspector checks off that give you additional credits. You get credits for impact glass, hurricane impact glass, but it's tricky because for a condominium association, every single unit has to have impact glass and impact doors for you to get that credit. All it takes is one unit not to have it and the whole building loses it. So if you're going to spend the money, make sure it's worthwhile to get impact glass on the entire building.
Okay, we have a question here.
Okay, I have 3 questions. One of them, we've heard from an agent that there's something about a 30-day rule where they either don't have to give you a new renewal price or they can't give you a renewal price until you're within 30 days of the end of your policy. Is that correct?
There's no rule. So state law says if an insurance company is going to non-renew you, if they're not going to offer you a renewal quote, they have to send you written notice at least 45 days before your policy expires. And if the insurance company truly is going to non-renew you, we get the notice way in advance. 90 days, I've seen 120 days before it in some cases. As far as when quotes get released, most insurance companies release quotes around the 30-day mark.
We got 2 more. One is that we're also hearing if we buy a policy with someone and we put a new roof on and we want to go to another company for a better rate, that the new company won't underwrite us because we have an existing policy. Is that just...
No, that's not true. So if you bound the policy and in the middle of the year you put a new roof on, the company that you're currently with is likely not going to give you any credit. But that doesn't mean you can't cancel and go to a different company midterm that's going to give you a better rate.
I understand we can, but is there some illegal action that the insurance companies have all grouped together and said they won't write you a policy?
No. The only issue is if your policy has been in effect during hurricane season and you cancel, then that's the issue of when you usually don't get any premium back. And it depends on what company you're with.
Okay, 3rd question, and then what we're going to do is you're going to stick around for a
Yeah,
while,
I'll stick
right?
around, yeah.
Plus you have cards here from him, and he will definitely speak to you after. You can make a line and just speak to the insurance agent.
The last one was when you were talking about the ACV affecting whether homeowners could get a mortgage.
Yeah.
Was that for the HOA ACV on our building?
Yes.
That might affect individual homeowners?
That's exactly right, yep.
Well, this is so very interesting. Yes, this was great, some great questions. These are all leaders here of our communities. They'll go back and provide this information. Thank you so much.
My pleasure.
For this information, and definitely please stick around because there'll be lots of questions. And remember everybody, next month, the sheriff will be here. We're going to have therapy dogs. We're going to have some information from our District 4, a very involved security seminar next month, along with legislative, what affects HOAs and COAs. You're going to get a handout on what is new in the legislature that they are contemplating and running through committees. Have a terrific month.